Good afternoon, everyone, and welcome to Stock Market Today. Ali Corman, Ed Carson here with a look at what went down in today's session, where we saw this rally continue. Ed, NASDAQ up now 7 days in a row.
Yeah, it keeps on creeping up there. We had a few interesting names. Goldman Sachs broke out. Academy Sports is trying to get back into position. And Avis had a great day, but that's a stock you may want to rent, not own.
All right, we'll get into that. First, let's take a look at the major indexes. So here is the NASDAQ composite. As I mentioned, another day up at gaining 0.3%. The S&P 500 and Dow up about 0.4% each, and the Russell 2000 eked out a tiny gain. So are we going to just continue to climb higher here at this point, or are things now looking so good that we shouldn't be blinded to the fact that we may pull back here?
I mean, we could always pull back here. Obviously, having this many days, I mean, some of these days have been wafer thin. There haven't been, like, it hasn't been this massive vertical leap, but it's a lot of days. And all the major indexes, and I think even the Russell 2000 hit highs, all-time highs, at least intraday. So, there's definitely that kind of action going on. There were some mixed action in leading stocks. Yesterday, it was like some of the top stocks, some of the mega caps fell. And so the NASDAQ rising was really impressive. Today it was like, some growth stocks were mixed. I mean, there were some that were doing well, some did not. I mean, nothing too dramatic, but I think, you just have to be ready for a pullback. It's not necessarily going to happen, doesn't necessarily have to happen, but we've had 4+ weeks of sort of going up at a pretty decent pace. Pulling back for a day or two or a week or two wouldn't be really a surprise.
So yeah, with that said, I mean, there have been a ton of buying opportunities over the last couple of weeks, and that's continuing. So small caps breaking out here. And just a quick look at the S&P 500 and Dow, mentioned gains of 0.4% a piece for each of those. So the S&P now pretty solidly above that 4,600 level. The Dow, meanwhile, above 36,000. So a lot of these key levels starting to be crossed.
I think, and I think that people can continue to buy. I mean, they might want to start, along the way, you might want to also be taking some partial profits because some stocks have soared and you're going to have some losses. Probably there's been some volatile action, some names. So you may want to cut some losses, but still adding some things, maybe even adding to your exposure. That's if things are going well for you, if you're making headway. But if you haven't been making headway, especially the last week or two with things more volatile, you might just want to say, well, cut your losses where you need to and just sort of like pull back a little bit, sort of assess, well, what's going on? Because if you're out of sync with the market, especially with the market sort of at areas where, it wouldn't be surprising to have a pullback. You don't want to be out of sync and then see the market really selling off. Then you could be really in trouble. So just how are you doing is the ultimate marker. I mean, you're probably going to do better in good markets, but if you're not doing well, you should be thinking, wait a second, what am I doing here? Is it me? Is it the market? Is it the sectors I'm in? And try to figure that out.
So true, Ed. And speaking of buying opportunities, Goldman Sachs, GS, among them today. So gaining 1.8%, had a little bit of above average volume here today behind the move. So after getting back above its 50-day line on earnings and tightening up, now blasting 1.8% gain to new highs.
Yeah, it was nice. And, there was the early entry on October 15th when it came above the 50-day line on earnings. So that seemed to be, and that's also with Goldman, as you can see the pattern where it often comes back below the official buy point of the prior one. So there has been an argument, buying it early has been better. But one good thing about this move is that not that it's guaranteed to work, but there was a pause. It was nice to see that pause. It's a flat base, so technically it doesn't have a handle, but let's face it, it basically had a handle. As opposed to a lot of the stocks that are sort of cut bases that are just sort of rising right up and, coming through without that pause make you feel a little bit of confidence that maybe it'll be able to keep on going.
And Goldman not really as impacted by rates as some other financial names.
Yeah, they're not as they're investment bank. I mean, obviously, it may have some impact, but not too much. And even a lot of financials, even the ones that are interest rate sensitive, had a good day because while the 10-year fell, the 2-year also fell. And that's sort of really the spread between the short and long. It's not how high the high rate is, it's the spread between those two. And so banks in general had a pretty good day.
Okay, well, Is it time to play Academy Sports? ASO, the stock gained 3.4% today. Didn't really have volume, but it did perk up last week when we added it to Swing Trader on the 21st of October. It hasn't made a ton of progress since then, but I guess it is a good thing that it's now officially formed a handle.
Yeah. And I can understand if some people who bought as it bounced off the 50-day line, especially how high you got on to it, you might have said, I got to get out, and that would have been fine. There's nothing wrong with that. It's like I'm round tripping. I don't like this action, even though the volume wasn't that bad on the way down. You could have held it, you could have sold it. But even if you did sell it, you could still be thinking, I could get back into this, maybe with a little more strength because the volume wasn't really there today. Maybe a little bit more, you could get an early entry, some kind of trend line break or thing. There's obviously the handle breakout that you could see coming up. That handle isn't too far above the 50-day line. So it's not like one of those where this is a 40% deep base and it runs up to the top and there's all that run. It hasn't run that much. It's actually just took a break. This is the sort of the first real up day it's had in several sessions. So, that would be some given reasons why you might be looking at this one once again.
Right. And I think it all depends on your trading style and your time horizon. If you are a swing trader and you're going to take some profits into strength after 1, 2, or 3 days, then maybe you are getting out when it comes back down to the 50-day line. But if you are treating this as more of a position trade, you could use that 50-day line to keep you in the stock.
Yeah, you're right. The investing. Yeah, I'm sorry.
No,
Investing
you're
style
good.
is so important, so important. Yeah, and knowing your strategy and trying to stick with it. Don't just suddenly go into it. That's a position. It's a swing trade, and then saying, "I'm down 5, 6, or 8%." Now it's a position trade. You go into it with that strategy and stick with that strategy.
Yes, important to note there. And let's talk about one of the most talked about stocks of the day, and that is Avis Budget Group, ticker CAR. Finished the day with a gain, Ed, of about 131%, but that's about sliced in half at what it was at the peak of the day.
Yeah, and that's just amazing run there. And it had a huge run in the month before. So basically, okay, there was great earnings. I had great earnings. They talked about buying more electric vehicles, and apparently that's all you need to do is say you're going to buy electric vehicles and your market cap doubles. But anyway, that's caused a big short squeeze, and it had been going on already. I mean, if you were a short seller in this for over several weeks, you were really hurting. And then, that just causes an amazing issue here. And it got a lot of attention on Reddit. But we also know that the recent history is when everybody talks about a stock, day one is good, and maybe day two is you really should be thinking to get out. I mean, there's just so many that have done that. Even just DWAC, the Trump SPAC stock, which really and it's nothing to do with that. Had a one day when everybody was talking about. The second day was up for a while. Second day had a big day, but it came well off its highs, and then it came back again. It's if you owned it from the beginning. I don't know, it's nothing personal. That just sort of happened. So with it coming that way off its highs, you probably want to be sort of taking this as a big gift, if you have happened to own it, and just knowing, because this could easily come down, just knowing the history of a lot of these stocks, that they can come down a lot.
Yeah, these meme stocks that are going up 100, 200, 3%, 300% in a day, these are not what we would call buy and hold stocks. This is not something that you want to be putting your entire life savings behind a bet like this. But yeah, if you're following our rules, take this as a gift today. But it's a different thing when you want to try to make a gamble with a day trade on one of these, and you got to be managing your risk, because there were buyers above 500, Ed.
Yeah, and it's just like where is the buy point at this point? Sort of like, and where would it be a normal place for this to find support? I mean, this could come down to 200, and it would be hard. It would still be drawing that ascent, the pre-ascent. It would still be looking normal. So you just have to, if you're in it, just knowing what's going on. Where will it go from here? I don't know, but we've seen what a lot of these stocks have done after a day or 2 or 3.
Yes. All right. Thank you so much, Ed. And if you are a leaderboard subscriber or trialist, make sure you go to leaderboard.investors.com, where in 15 minutes from now, we will be hosting our monthly leaderboard scorecard webinar. So we'll see you there to talk about our monthly performance for October. We have a lot of great stuff to share with you. So looking forward to seeing you all over there. Thanks, Ed, for your insights today, and we'll be back tomorrow.